Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everybody, and it's October 11th. Just one economic news release scheduled for today as, again, we got some important news that would be released today, but went shut down. They're not being sent out there. So some of the things that would be released today would be the PPI, which is the inflation number on the wholesale level, as well as the retail sales. So those would be important indicators as to where the economy is going. And at some point when the government resumes, those will be released, and I would definitely expect some volatility in the markets as to when those are released. But there's no time frame as to when those will be released after they resume. So this brings us to what we can show, which is the consumer sentiment for the month of October. We had a 77.5 rating for last month, and it was figured to go down a little bit to 75, and it dropped down to 75.2. So pretty close to where the forecast came. And this is actually the lowest reading we've seen in the consumer sentiment. Basically, a lot of it's being attributed to the debt ceiling crisis that's been going on with the government shutdown, debt ceiling, and the volatility in the stock market. So a lot of people probably aren't feeling as good this month as they were last month. And this again was the lowest rating since we've seen actually since January. So as a result, we're going to jump over and take a look at the stock market, and it's currently up. And right now the Dow is up about 100 so far this morning. A lot of it, of course, is what we shared yesterday, the hopeful end of the government shutdown. There's been some optimism where government or the Republicans have been sending out a plan. It looked like it was something that could potentially help ease things or ease tensions that might work, and we'll kind of have to wait and see when that transpires. So let's go ahead and take a look at the bond market, and we're testing the new ceiling above at the higher 101 level. We did start off higher and with the opening gap. Now the gap is closing, and we're slightly better when we left off yesterday. We did have a better rally, and we closed that gap from yesterday when we had that worst close. We'll have to kind of wait and see how this transpires. Obviously, we'll need a couple of days, as the bond market did start higher than where we left off, where we were yesterday. And of course, that gap, as I mentioned, is basically closing at the 101.25. So as of right now, the interest rates are about the same where we left off yesterday. And if pricing came in on the East Coast, they're usually a little bit sooner. Pricing worse and are basically at this point where we left off yesterday. All right, so stay tuned. We'll have to kind of wait and see. We do have a lot of volatility as the government shutdown has been kind of been playing a little roulette here, so to speak, with the both markets, stock and bond markets. And as a result, we've been seeing bond money going into the stock market with equities, and when the stock market was going down, it was going to the bond market, and they were kind of, as we saw about a week there, some improvements there. All right, folks, thanks for watching. I hope you guys have a great upcoming weekend. We'll keep this short and sweet, and we'll hopefully next week we'll have better news with the government shutdown and get back to hopefully get some norm back to things. All right, have a great weekend.